Corporate tax filing and payment requirements under the UAE Corporate Tax Law. Overview of corporate tax filing and payment deadlines. The UAE Corporate Tax Law operates as a self-assessed regime, meaning that taxable persons are responsible for accurately calculating and remitting their corporate tax liabilities. To ensure compliance, taxable persons must file their corporate tax return and make payment for any corporate tax payable within a specified deadline, which is typically set as 9 months from the end of the relevant tax period. Example of corporate tax filing deadline. For a taxable person whose financial year ends on 31st December, the corporate tax return and payment must be submitted and made on or before 30th September of the following year. This timeline allows businesses the required period to prepare their tax return, assess their tax obligations, and remit the necessary payment to the Federal Tax Authority, FTA. Penalties for late submission and payment. Failure to comply with the filing and payment deadlines will result in penalties. The penalties are structured based on the length of the delay, and they are as follows. AED 500 for each month of delay, or part thereof, for the first 12 months of delay. AED 1000 for each month of delay, or part thereof, starting from the 13th month of delay onwards. These penalties are designed to incentivize timely compliance with the tax obligations, ensuring that taxable persons meet their responsibilities within the prescribed timeframes. Submission of the corporate tax return. The corporate tax return can be submitted by the taxable person themselves, or it may be filed by an authorized third party on their behalf. Such third parties could include tax agents, legal representatives, or any other individuals or entities with the appropriate authority to file tax returns on behalf of the taxable person. In cases where the taxable person is unable or unwilling to submit the corporate tax return themselves, the designated third party must ensure that all required information is accurately filed and any payments due are made on time to avoid penalties. Tax group filing requirements. In situations where a tax group has been established, the parent company of the group is responsible for filing the corporate tax return for the entire tax group. This means that the parent company must report the tax obligations of all group members in a single consolidated return, and there is no requirement for individual returns to be filed by each member of the tax group. This simplified filing process helps streamline tax compliance for groups of companies, reducing administrative burdens and ensuring that the tax group remains compliant with corporate tax requirements. Required information for the corporate tax return. When filing the corporate tax return, the taxable person is required to provide not only the basic information requested by the FTA but also any additional information deemed necessary for the assessment of the taxable income. For example, the taxable person may be required to submit their financial statements as part of the return. These financial documents are used to calculate the taxable income, which is the basis for determining the corporate tax payable. The FTA may also request other supporting documentation, such as details of any tax credits, exemptions, or elections that apply to the taxable person. It is crucial that taxable persons maintain accurate and up-to-date financial records and statements in order to ensure that their corporate tax return is both accurate and complete. Failure to provide the required documentation or to submit a complete return could result in delays in processing and additional penalties. For more details, contact us.